Hi everyone, it's November 3rd, 11 a.m. Eastern Time, and we had a really nice 5 days in a row, all green on SPX. Yesterday we had a really nice gap up, and even today the volatility is around 15, I guess. Yeah. So this is nice. This is really nice. We expected it to be in this top rectangle, but I think we will pull down a little bit and we will come back there. And from there we will need to see how big is the next pullback, and we can actually understand whether we will continue going down or we will go up from here. But that's again just technicals, so nothing serious. Let's see what do we have with options, but first let's go and see Russell. Russell is really nice today, had a really huge gap. Again, technicals, I would expect it to go slightly down and then back from there. And the Nasdaq, it's the most sane graph among all the others. Okay, so the volatility is pretty low. It hasn't been here since September 20 or so. No, actually it was here on October 12th. So I would probably try to find some nice long strangles, maybe even straddles, because as I said, I would expect it to pull back a little, and from there we will either go up much more or down. It will depend a lot on the next or maybe second big pullback. It will be more clear. So I do not have any direction, so strangles would be the best option for me today. Let's see first if we do have something interesting for some ETFs like IWM or SPY or something. Yes, we have strangles, which are pretty cheap. We have something even sub 4. Very interesting. And deltas are pretty low, so that's why it is that cheap. It's just 2% of the underlying price. The probabilities are pretty low, 39 to 49% that the price will be able to get to that, to the break even. And the date is December 29, so we don't have really much time, just less than 2 months. So technically it is possible. Where are we today? 174, and we need to get to, where are the break-evens? 187, which is probably, I would say it's possible. 187, where is the graph? No, I think it would be a little bit too extended, but because it's strangle, it's also, we will win if it will go down a lot. So this is also interesting. 165, have we been at 165 or 161? Yes, the actual bottom was 169. So if we will continue going down, that will be a really nice trade. And if something more expensive, for example, $100 more at $500 strangle. Interesting, but the probability is almost the same. What is it? The deltas are 25, 27, and here the probabilities were 39, 49. Interesting, very interesting. There is a more time. Yes. Okay, this one is actually more interesting. It has higher deltas, so we have more chances to get to that point. We have 20 more days, so yeah, I think $100 worth it. The price is still pretty low. It's 2.8. The price of the strategy is 2.8% of the underlying price, and here is even the actual gamble for $345. December 22. It's too close. Well, yeah, I like this too. Probably I like the one with more time because it's a strangle. Long strangle, we need more time. So yeah, we will keep this one in mind. Straddles are pretty expensive. What do we have here? $900. Probabilities are nice. Well, it's basically twice that price. I don't usually trade straddles because they're too expensive. The price scares me right away, so I don't usually do that, but we'll need to try one day. Okay, then SPY, or yeah, Qs. Same thing, strangles. Yeah, we have something with $7. December 29. No, not very nice. 10 is probably, yeah, a little bit too much. So I like Qs more, but let's go and see the SPY. SPY doesn't have any strangles. Interesting. But we do have some straddles, and they're all like around $2,000. A little bit too much. Vertical puts, no. I do expect a little pullback in the probably Monday, Tuesday, because we are really extended. But I don't want to make such a small bet. Not really interesting. Too short for me. The too short time frame. And I had emerging markets here. Emerging markets, they do have a straddle, but with emerging markets I'm actually pretty bullish. I think it's, oh yeah, it is too extended right now. I should have been bullish like 3 days ago, but well, yeah, the straddle could be nice here. It is extremely cheap. Well, not in relation to the underlying price, but overall, like, it could be a good gamble for me, and it will hedge on the way down. I'm sure we will have some kind of pullback soon, which will sponsor the call. So basically, we would buy a straddle, then if we go down, we will sell put, and then for that profit from the sold put, we can buy another call. So yes, this is for ETFs. For now, I like EM and IWM, maybe Qs, but let's see the strategies for all the companies. Created vertical call and put. No, I'm not in the mood for them today. Today I want to go long because the VIX is low. It looks nice. Long call. I don't see any interesting companies here for now. IWM, better to go with a strangle. So no need to get a call here. Long iron butterflies, they're usually very, not much profit here. Yeah, like $5 profit. Why even use it? I probably would need to adjust the filter here in the Bullish Trade app for butterflies, because we have like 25 long butterflies and they're all kind of useless here. So I would need to adjust expected profit, and I will have a better search results. Long straddles. AMD, shop. Shop is interesting. What do we have with shop? yesterday I closed a really nice short put on shop. They had earnings. Really good here. And the straddle is 725. What do we have here? December 15. No, I definitely don't like anything that close. Straddle on EM, it's probably the one we were talking about, and there's nothing more interesting. Long strangle, again AMD, SEDG. I think I do have some positions there. Do I? No, I don't see any. Well, technically, for some reason they are really, yeah, they had a really bad earnings yesterday. SEDG, where is it? Again, December 15. No, not interested. Tesla. I think this is it. Short naked put, if there is anything really great. SEDG, well, there, everyone bought them yesterday. They fell a lot, and everyone still bought them. Interesting. Margin to return is around 30%. Nice, but I think we'll just go with two strategies for today: EM and IWM or Qs. Whereas we'll compare. What do we have? Probably IWM. Well, technically I will just make a public trade for IWM, and I will make the one just for me with the Qs, because it looks really nice. This one, January 19, December 29. Another one, January 19, is around, well, the difference is not that big. Yeah, I like them. So yes, this is it for today. We will go with the EM strangle and IWM strangle. I will find them right now, just so we can make them, just so we remember them. IWM, January 19, 165 and 185, and EEM, emerging markets, straddle at 38 and 5 for $167 debit. That looks interesting for me. So I think this is it for today. Subscribe. If you have any questions, leave them in comments. I will check everything and we will try to answer. And see you on Monday. Bye.